Hello guys, welcome back to a new video. In this one, I'm going to show you how to properly use time frame alignments when trading market structure. So previously I showed you a strategy that is based on only market structure, right? Only highs and lows in these two videos. But on this one, I'm going to try to focus on time frame alignments. So which time frame you need to use, how to properly use them, and how to get multiple trades per day using only market structure, nothing else. And also I'm going to try to answer some of your questions. So I received a lot of questions in my Twitter account and I'm going to try to answer them all here in this video. So again, I'm going to explain the concept with the help of a trade breakdown. So here's a trade that I took earlier. I shared that on my Twitter account, so make sure guys to follow me on my Twitter account. I post a lot of charts on my Twitter account, daily charts, and I'm pretty sure that they're gonna help you to understand better the concepts. So let's just get started. Let's head into the chart and get started. So basically we're gonna use this structure right here. Price will expansion, and then it will retrace. The retracement will happen after taking a previous high. So remember, external to internal. External range liquidity. For example, here we take a high and then price did what? It retraced, right? And then after price done retracing, it will expand higher. So internal range liquidity to external range liquidity. Here we go. Expansion higher, returning to a fair value gap right here, and then expanding higher. And then retracing, expanding, and so on and so on. So this is for the people that is telling me that you changed the strategy or something like that. It is the same, all right? It is the same. We are trading expansions and retracements. That's pretty much all the market does. Sometimes it consolidates like this, but this is still a retracement, right? Retracement to here. And then expansion. Now, when price starts retracing, it tends to return to the previous pullback right here. And especially the 50% area, it is sensitive. Now, a lot of times the 50% area is aligned with something in this leg right here. A PDRA, if you may, a fair value gap. In our case, we have a fair value gap right here, an order block right here, an order block. It doesn't matter, guys. Now, in this area right here, if we take a closer look right here. So let's say that this is the hourly time frame or the daily time frame or even the 1 minute time frame, it doesn't matter. If this leg is 1 hour, a 1 hour leg, 1 hour time frame, let's take the 5 minute for example here. You will see something like this. So this is the retracement in this leg right here. And when price finish retracing, it will do something like this. It will violate a previous high, and then return to here, right? Expansion, retracement, expansion, retracement, expansion, and so on. So as you can see, this leg right here, this leg is the same right here, the same thing. Now, what if we take a look at this high right here? It will be something like this on the lower time frames. The same pattern, the same market structure will repeat itself on all time frames. Right? I can't make it simpler than this. This is the easiest form of market structure. Now, before we head into the trade breakdown and how I used these concepts or this market structure to come out with a trade idea, I'm going to answer a question, which is, some of you ask me whether that we need to use the 1 hour time frame. So let's say you are executing on the 1 minute time frame. You want to be 1 minute time frame trader. Do you need the 1 hour time frame for buys or something like this? Or do you need 3 time frames every time you want to take a trade? So let's say, for example, this is an hourly chart. We have an hourly expansion, retracement. This is the 1 hour time frame. And here on the retracement, if we zoom in on the 5 minute, you will see something like this on the 5 minute, a break of structure here. Now, if we zoom in here, once again, one price retraces, and if we zoom in here on the 1 minute time frame, you will also find this pattern right here. So do you need 3 time frames every time you need to take a trade? No, you don't need that. And let me explain why. So let's say that this is a 1 hour time frame again. Price retrace to here. And we're going to talk about only the expansion. Retracement, same thing, all right? So price tapped into here. And then we have this structure on the 5 minute. And we know that price has shifted on the 5 minute time frame here. And this is high probability that the retracement is over and we are preparing for another expansion higher, right? So on the 5 minute time frame, it will look like this. Now, here you have multiple opportunities to get in. You first of all have this one right here. This one right here, right? This is the first entry. You can enter from here. You can look for 1 minute entries, or you can directly enter from here. This is the second entry. And as you can see, this is, if you are seeing it as an ICD trader, this is a smart money reversal. This is the second leg. This is the third leg, and so on and so on. So this is basically a market maker model. We have another opportunity here. You can enter from here, right? You zoom in here and look for entries. Another opportunity here. Now, price will not always come back to this area side here. You need to understand this. Sometimes it will trade higher and then it will come back to here, and the retracement will just be here, tapping into an imbalance or a fair value gap into here, this leg, and it doesn't need to return to the previous pullback, right? And then continue higher. So you can focus on only the legs, the retracements that went all the way to here. You can disregard the times that price retraced only to the imbalance and continue higher. So as you can see here, if you entered from here, this is a 5 minute structure, and you entered from here. Maybe you look for confirmation on the 1 minute time frame. As you, again, same thing on the 1 minute time frame. Or maybe this is a 15 minute time frame, and this is a 1 minute. So price is fractal, and you can use the same concept on all time frames. So as you can see, we are not using 3 time frames every single time we enter. For this entry right here, for the second leg, we use only 2 time frames, the 15 or the 5 minute, this area right here, and you look for executions entries on the 1 minute time frame. But you are aware of where you are on the 1 hour time frame. So you know that you are in an hourly expansion, or maybe you are on an hourly retracement. So this is why you need to be aware of where you are on the 1 hour. Now, if you want to execute on the 15-minute time frame, you can do that, of course, and use the daily time frame for that, right? But you will not get that many setups per day. So whatever suits your style. For the 1-minute traders, use the 1 hour and just to know where you are. So this is a long introduction, but it is essential, and you will see it clearly on when we go to the chart right here. So, and I need you to backtest this, guys. All right, don't just watch this video and go trade live with it. Anyways, now let's apply the same logic to here, to this fractal of price. So what do we have? We have a low, and then we have an expansion. This high right here, this leg right here took this high, so it needs to retrace. We have a retracement to here. And then we have another expansion. And now we are retracing, right? This is a retracing. So after putting this high, right? And this is a valid high because we closed above the previous high, right? We started retracing, right? So price started tapping into the previous swing point right here, and also this fair value gap. And as you can see, you have multiple opportunities to scalp, right? So it gave multiple rejections. But for me, I like to focus on the 50% of the swing point. I like to wait for price to come back all the way to the 50%, and then I will look for this structure right here. All right, we have a scalping opportunity here, 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 and here, but we're not gonna focus on that. We're gonna focus when price taps into the 50% area. Now, after tapping into the 50%, let's zoom in into the 5-minute time frame and read the market structure there. So once price tapped into the 50% area, I noticed that price is shifting from bearish to bullish. So we have a low right here, as you can see, after breaking this low, right? So here we go. We have a high, we have a low, and we break that low. And then we put in a high, a pullback, and then a new low. So as you can see, this is a bearish market structure. We are putting something like this. All right, this low right here. So now we are expecting for price to print a high right here, a lower high, and then continue lower. But this is not the case. Now we printed a higher high, as you can see here, and we closed above it. As you can see, we closed above that higher high. We need a body closure. As you can see here, it happened here. There you go. So in order for us to create a new high, we need body closure. So price did this, traded higher. So after printing this high, and you might see that this is a new high. This is the high, and this is a pullback, and this is the high. But this is not the case, guys. Why? After printing this high, we have a pullback, but this is not a valid pullback. This is not a valid low. Why? Because this high didn't close below the previous high. This is only wicks, as you can see here. So this market structure shift, this is fake market structure shift because this is not a validated low. In order for this low to be validated, we need a new high above the previous high with a body closer. So as you can see, this is a fake market structure shift because we don't have a protected low right here. This is still the protected low. And this leg right here can be considered as one leg, one singular leg, and this is the high. Again, this is not a valid pullback, this is not a valid low, and this is not a market structure shift. We are simply returning to the 50% of the previous area right here. We returned to 50%. We didn't really get that 50% top, but what happens next? We have a strong rejection creating a new high. So basically, we have this structure right here. We came back all the way to the previous swing, right? So this swing, and then we have another expansion to the upside. This swing right here tapped into the fair value gap, so internal range liquidity to external range liquidity, right? And now after printing a new high with body closure, what are we expecting? A retracement into the area right here. It is also consistent and aligned with the fair value gap, but we are only using the area, the 50% of the area. We are focusing on that 50% area, right? So after tapping to here, what are we expecting? We are expecting another expansion to the upside, right? We are expecting another expansion. So here, what you can do is you can enter from here. You can directly enter from this area right here. When price returns to the 50%, you can enter, and as you can see, price flight to the upside because the higher time frame, which is the 1 hour, is also on our side. Or, and as you can see, we are using only 2 time frames, or you can use one more time frame to confirm your idea and get a better RR. So all you have to do right here in order for you to achieve that is one more time dropping lower. Let's remove the hourly area. So one more time zooming into this area right here, the 50%, and looking for the same structure here, the same structure. So let's go to the 1 minute time frame. So let's read the market structure once again on the 1 minute time frame, and you will see how beautiful the fractality of price. So we have a high right here, and this is the retracement on the 5 minute. On the 5 minute, this is the retracement on the 1 minute. On the 5 minute, it was a one leg continuous candles, but on the 1 minute, it is a series of highs and lows. So let's follow the market structure. We have a high right here, and then we have a low. Maybe you can consider this a low. Let's just disregard it. It's all right. We have a low right here, right? We have a low, and then we have a pullback. Now this can be considered as a protected high or a valid high only if we put in a new low. Do we have that? Yes, we do have that here. As you can see here, we closed below the previous low. So now this is a leg. This leg on the 1 minute can be considered as an expansion, a valid expansion. So after taking this low, external range liquidity returning to a fair value gap, internal range liquidity pullback, put in a pullback, and then another expansion, closing below the low, a pullback, another expansion, closing below the low, a pullback, but I want you to focus on that. So as you can see, this is the previous high. We didn't close above it. We didn't close above this right here. So this is not a market structure shift or break of structure or something like that. We have a failure to close above the previous high, which is the protected high. And what happens next? A rejection to the downside, creating a new low. So basically, we are doing this. Right? Here we have wicked and then traded lower. So what happens next when after creating this low, price traded higher, putting in a new high, higher high. So something like this. As you can see, same structure on the 1 minute time frame. And what are we expecting? You are not going to buy from here. No, wait for retracement. Wait for that retracement. You can enter on the 50% for better RR, but I prefer to enter somewhere around here and maybe add to my positions here because I don't want to miss the whole move just because few pips on here, all right? So this is entirely your choice. So wait for retracement and then you can take your entry. So no more zooming in. This is the entry time frame. So I entered from here, right? First position was here, second position was here, right? So as you can see, a tight stop loss. If you entered on the 5 minute time frame, of course your stop loss should be here. And I believe that, I believe this was my second entry. It was down below. Yeah. So this was my trade. And price, because we were on a 1 hour area and a 5 minute area and a 1 minute, it went like 100 R or something like that. And I took only 3 R from this move. Yeah. It's really painful to watch this, but it is what it is. So I hope this was helpful, guys. I try to make it as simple as it can be. Alright. Same thing happened here. Same structure happened on the 5 minute time frame and the 1 minute time frame, and price closed and traded above the previous high, returned and then traded higher. It's only market structure. We are not using the power of 3, that kind of thing, standard deviations. We're only using a market structure. Alright. If you are an MMXM trader, then these things will be so easy for you to understand. Again, I learned to refine the highs and lows, the stop loss placement, the valid market structure shifts from Dave's channel. More details, check his channel. I'm gonna link it down in the description. So if you have made it so far, then thank you for watching. If you have any questions, DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Now, happy trading and good luck.